Welcome back, our accounting buddies. Yes, what are we looking at? We are looking at trading stock, and there are certain adjustments that you need to be au fait with. There are certain adjustments that you need to know. And the first one that we'll be dealing with is trading stock deficit. What do we mean by this here? Number one, if you identify that certain value of trading stock has been damaged, that is obsolete, or that has been destroyed due to a flood or a fire, then certainly you're going to identify the expense. And therefore, your two accounts would be, think of this here, you will debit a trading stock deficit account. Understand that this here is a nominal account, and also understand that it is an expense. That's right. So therefore, you can clearly see that you have identified this expense. So you're going to debit this account. Why are we debiting it? Because it's an expense. What do expenses do? Expenses decrease your owner's equity. Right. What do you credit? Certainly, you're going to credit your trading stock account. Why? It's an asset account, decreasing in value, therefore credited. Now remember, this is when you identify the expense. That means this has been identified during the course of the year. What would happen now? Come the end of the year, you take a physical stock take. In other words, you go and physically count your stock, and now you compare that stock value with your trading stock as it appears in your trading stock account. And the moment you find that your stock value is less than what appears in your trading stock account, in other words, this is what I'm saying. In my trading stock account, I'm going to have a value for trading stock. Now, if this value for trading stock, for example, is 10,000 Rand, and your physical stock count amounted to 9,500, you can clearly see and you can clearly identify that this value of your trading stock is the correct value. Why? Because you physically counted it. And notice it is less than this amount as it appears in your trading stock account. When this happens, it means that during the course of the year, there has been pilferage of stock, or stock has been lost which you have not identified. Therefore, you're going to do exactly what we did before. And what was that? Debit the trading stock deficit account and credit your trading stock account. By doing that, what are you going to do? You're actually going to reduce this value of your trading stock to bring it to the value as it should be, as your physical inventory has done. So therefore, what do we now do? Trading stock deficit, that one, as I alluded to early on, is an expense, and it will appear in the income statement under operating expenses. Please remember that. Okay? Once again, for us to recap the double entry, it's a debit to trading stock deficit and a credit to my trading stock. Okay, now, under inventories in your balance sheet, the deficit will be deducted from your inventories and you will show the amount as per physical stock count. What about the trading stock surplus? What are we going to do here? Once again, watch the scenario. There's your trading stock account. It has a balance of 10,000 Rand. And when you do a physical stock count, you find that the value of your trading stock is 11,000 Rand. Clearly now, you're going to debit your trading stock account to increase its value. Watch this here. You're going to debit your trading stock with 1,000 Rand, which will result in your new balance being 11,000 Rand, which will conform with your physical stock count. So, double entry, a debit to trading stock and a credit to trading stock surplus. Remember, with a trading stock surplus, it is now an income. And where will it appear in your income statement? It will appear as an income under other operating income. What will you have to do? You will have to take your trading stock figure in the balance sheet, and it now must be changed to show the new figure. In other words, if we use the example, it will be the 10,000 Rand plus the 1,000 Rand which you adjusted it, and therefore in your balance sheet you will now show your trading stock as 11,000 Rand, the new figure. Always remember to show this figure in brackets so that you can get part marks. If this appears in an exam or a question paper, then you would at least get some part marks if perchance you get it wrong. So my accounting buddies, what is it that we've done? We've highlighted the adjustments for trading stock in terms of trading stock deficit and a trading stock surplus. Make sure you can handle both these in preparation for something more to come. And what's coming now? Stock valuation in terms of, I'm sure you want to know. So therefore, stay tuned because you want to know new methods of stock valuation.